Hi everybody, Eddie here. Just going to do a weekly update. This is my third try. I keep forgetting to try my mic. All right. This week's been a fairly good week. It's actually a good sign that we did have a pullback because we were pretty extended, right? We had a really good 2 weeks, and then now we pull back, and then we have a reversal hammer after breaking the 8 day, and then try to retest that 21, and then they actually bounce back up above the 8. So that's a really good sign for a reversal and retest. So this is a very key resistance area right here. So you can see that we did break above it for like a day, and then next day we start reversing, and then on Thursday we have that big drawdown, and then on Friday we have the drawdown, and then it was bought up at the end of the day, right? So that was kind of expected because we are at quarter end and monthly end as well. So a lot of the funds, they do their rebalancing and then reallocation of their capital. So it tends to do get volatile towards the end of that month, right? So far, the chart's still looking very bullish. If we look at the weekly, it's a little bit different story. Weekly chart is actually slightly bearish because we have that reversal doji right here. Usually that indicates a reversal for a pullback before going higher. So that can happen as well. So what we're looking for is to see this week if we will break the low of last week, or we will break the high of last week. If we break the low of last week, most likely we're going to test the lows of the previous week, which is around that 50-day moving average on the weekly chart. And this is a very important level. If we do hit this level, I do expect it to come back down a little bit and potentially go lower as well if it picks up momentum. But if it actually breaks the highs, we're going to test the new all-time highs. All right, so it's a very important week to pay attention to. Usually the first 2 weeks of the month sets the tone for the rest of the month. So we'll see what happens on Monday. What I like to do also is after a month end, I look at the monthly chart to see what's going on. So you can see we actually had 2 months in a row that has these reversal hammers, right? These are reversal candlesticks. They came back, tested 21, bounced back up, came back, tested 21, bounced back up. So that's a good sign. It means that people don't want the market to crash. The funds are buying it up, right? So if people are buying it up, that's a really good sign. And what we're looking for is a continuation from here. We need to see a continuation candle this month and break the high of the last month. If we do that, we're going like I said, we're going to test the highs, and then we'll go higher from there. Right, the Qs, very similar chart, slightly weaker. You can see right here the Qs found a lot of resistance in this area as well. It was also the 200-day moving average. We did break above it for a day, and then we reversed back down. But we did close above the 8, which is a really good sign. And we want to see this area to hold for next week. If we break the low of here and then breaks the 21, it could be a very weak move. And potential go back down, but we'll see what happens on Monday. If we actually have this reversal and then we came back above the 200 and then a break of the 200 and Tuesday or something like that, that would be a very bullish trend. And then most likely we want to test these highs over on this side over here. So IWM. So IWM, very similar. We created a nice base over here. It was double bottom type of base, slight small cup and handle. We want to see it bounce back up to over here to form the full cup. The 200 days right up here is a resistance area. Usually on the first try of the 200-day moving average, it fails. Right, so I do expect it to bounce back up here and then fail, maybe a retest of this channel right here, and then go back higher, right? So this is a really important level to break back into, because that's the level that's been tested multiple times in the past year. So it's a very important level, right? We did break above for one day, that wasn't strong enough. So usually we get a fake out and then the real breakout afterwards. So next week, want to see that real breakout, and you really want to pay attention to the volume. You see we got heavy volume in the breakout. If we have heavy volume in the breakout, then that's a more sustainable breakout, right? So that's what we're looking for next week. Some stuff are pretty interesting. A lot of the growth names, they're forming like a basting pattern. Like this is ARKG genomics. You can see the moving averages are now stacked and above it, and there was high volume on the break, right? And then we did a retest of the break with lower volume, which is a very good sign. And you can see the momentum is actually shifting back up. So this potentially could be the bottom of this trend. What we're looking for is actually a break over here and then break above this high and then go test this 200-day moving average. If you want to play this with shares. It's easier to control, or you can sell puts if you wanted to below the moving averages right here. But what I would play is the shares. I would buy the shares, set my stop below this consolidation low. So let's say 43.60 around there, right? So if I set my low at 43.60, it's trading at 48 right now. So that's about 10% stop loss. And usually 10% stop loss is the maximum we want to take on a trade, right, for shares. So if we're taking that 10% stop loss, we need at least making 20 or more percentage to make this a good risk reward play. So if we measure this, right, if we think that it's going to hit maybe over here at the peaks right here, that's about a 31% return. If we actually go up and hit the 200-day moving average, that's a 40% return. So that's a 1-for-3 or 1-for-4 trade. So it's a very good risk reward trade, and that's a trade that you can take. Make sure you set your stops if you do take it and use shares. Right. So if you want to trade that, you can definitely do it. Exxon Mobil. So I'm still in this with a call. But we are in a consolidation wedge right here. You want to see it either break above or break below. If we break below, I'm going to get myself stop out. If we break above it, it's going to try this high and then a new high. One of the things is the momentum is starting to weaken, right? You can see right here, momentum is start slowing down. But if it does break above with volume, it can bring this all the way back up again. So that's what I wanted to see. You can see that I set my alert already on that break. If we break this high, it's most likely going to test the high right here and go higher, right? Same with Devon. So this is Devon. Devon's another oil name. So you can see we have like this cup and handle at the top. Usually these are really good patterns to trade on breakouts, because if we break above this, it's going to go much higher. And what I like to see, high volume over here when it was being bought and low volume in consolidation, right? So this is very low volume. So that's really good sign for bullish setup of a cup and handle. You want to see low volume on the consolidation. That means nobody's selling, right? So right here, we're looking for a break. I did set an alert. You can see right here, I set an alert on the highs right here. So if it breaks the highs, I'm going to enter this and then potentially ride the next leg up, right? Yeah, so that's how I would play it. Just play the breakout, set your stop slightly below the breakout after you do. That way your risk reward will be much better. Nvidia, we have this consolidation wedge in the downturn. We break above it. It's coming back for a little retracement. You want to see it hold around this 21. It needs to hold that level in order for next leg up. If it does not hold this level, mostly come down to the 50 and the 200. That's a little bit too much of a pullback, and it could get choppy, right? But if it actually holds this 21, which would still consider a higher low, then you can potentially make another higher high, and we're actually going to hit that $300 price target, right? So I did sell it around right here at the top right here. I did take profits. I took some on this day and then some on the next day as it start dropping, right? So I did lock in some profits, and I'm looking to get back into it next week if it does hold this area right here. Tesla, I talked about last week on Tesla on this bull flag with the two inside bars. Very easy play. You play the break, right? So you can see we actually gap up and broke above, and then it consolidates some more, right? So that's a good sign. As long as it holds this gap area, also the 8-day moving average, it's going to continue higher. Where we're going for $1,200 psychological area, right? Also was this peaks over here. So this is a very important level, and it's a heavy resistance level. So most likely this is the area you want to take profits, right? If we take profits on this area, and then if it breaks the to new all-time highs, then you can potentially add it back, right, for the next leg up. Because if you look back in history, every single time Tesla consolidates, right, we do this break, we come back, retest, and then we consolidate a little bit more, and then we go for the big run. So that's what I'm looking for. I'm looking for this break, retest maybe, consolidate above this wedge area, and then potentially get the next leg up. Microsoft, double bottom play, same thing, just like the index. It's above all the moving averages, is at this key resistance area. We need to break above this, and then we're going to test the highs right here for continuation. And I like to look at the FANG stocks as a gauge to market direction, because if the FANGs are doing well, most likely the index will do well. So you want to keep a close eye on the on these FANG stocks, because if they start dropping off, you don't want to hold any stock, because this is what everybody's holding right now. So if these are start selling off, you want to get out of the markets, go back cash again, and then wait for a setup, right? Apple here, super strong trend. Yeah, we have a little pullback finally. We broke the 8, we came back, we closed above it. It's still very strong. Most likely we're going to go for the highs this week if there is momentum. You want to see it to hold the mid peak right here, which is 21-day moving average. If this does not hold, it's gonna come all the way back down, and the trend will be done, and you'll be getting out of the stock. Okay. NEO. So NEO, I'm super bullish long term. Short term trend is pretty weak. You can see we have a falling wedge. We finally broke out the wedge. It's consolidating right here with stacked moving averages, right? If you're not in this, you want to get start a position right here, right now, right? You want to you don't want to go fully in. You want to accumulate, right? Meaning go in parts and parts and parts in trenches, right? So what I did was I actually start buying around the 60s, then I hedge it on the way down. My cost right now is below $20, because every single time we hit a resistance, I would hedge it, and then I would profit off the hedge, and then I buy more stock with the money I'm making the hedge, right? This is dollar cost averaging, and so I'm hedging it on the way down, so I'm actually collecting profit on the hedges itself, and then I take them off, and then as they rally into a resistance again, I hedge it again, right? This is the way that you can dollar cost average into a stock without too much risk, right? Because you're getting more stock at a cheaper price, and your downside is protected by your hedges, right? So I do it in the form of a collar, and sometimes I just buy like a put spread, so that it would hedge some on the way down. Anyways, yeah, so right now I am looking for this to go to about this area right here, where this gap is over here. We tested the gap twice and failed. Hopefully the third time's the charm, and we fail that gap. We fail that gap, we're coming up to about right here, maybe test the 200-day moving average. So your targets should be around short term, $30 to $35 short term, right? If you hits $30 to $35, I would take some profits, or I would hedge it, and then buy back on the pullback, right? If you look at the volume, gigantic volume down here, and I know that a lot of the funds are actually accumulating large amount of shares on NEO as we speak. So you can see that how small the volume was, and then as you start coming down, you see how the volume start picking up. That's accumulation, right? As retailers sell their shares, funds are buying it all up because they're shaking you out to take shares in this, right? Because they know this potential could be a really big stock in the future, right? Google's have a nice cup and handle pattern right here at the top. So you can see that we've been sideways for a long time. We tested this bottom multiple times and did not break. So, and we bounced back up. So we're right here at the neckline. You want to see it to come back to test the highs right here. Once we test the highs right here, most likely you're going to get rejected before going higher. So you want to see the next leg up to be, this is your target right here. So it is holding all the moving averages. It's good. If you want to play this, I would sell some put spreads, or I can buy some call spreads aiming for this top right here. You can also just buy the shares. The shares will be much easier to trade in this environment. So I've only been trading mostly shares lately. So Bitcoin. So Bitcoin's looking really interesting. So we hit this base this bottom right here, it's forming a nice base. It's a cup and handle base. 200-day moving average is your neckline. If 50,000 is what we need to break, so that's a huge psychological area. As you can see, I set my alert here already. If we break above here, we're going higher. We're going to probably test the 60 and potentially break the highs right here. We do. It needs to pick up a lot of momentum, and that will be highly dependent on what the stock market is going to do. So if the index is going to do well, most likely Bitcoin is going to follow suit, and all the buyers are going to start coming back in and then break above, right? You can see right here how big that volume is right here on the break of the stack moving averages. And then look at this, it went straight up. There's not a lot of sellers. There's not a lot of volume. So not a lot of sellers, just buyers, right? There's a lot of buyers here, buyers here, buyers here. Every single time there's a huge buyer at the bottom of the trend, it goes for a move, and then it goes for another move, right? So what we're looking for right here, a big break with a volume bar like this. If we break with volume bar like this, it's going to be the next leg up, and we're going to try and test the 60,000. All right. So this is pretty much it for next week. What I'm looking at. Happy trading, and make sure you like and subscribe to the videos so I can post more. Thanks.